Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, let's take a look at the stock market here for January 25th. Actually, I think it's the 24th because the new session's already started. Let me check. Yep, 24th, Monday the 24th, 2022. I just want to tell you, everybody, as I'm looking at this chart right here, it's broken. Yeah, the stock market's broken, guys. And it's not going to recover. Not anytime soon. All-time high? No. Not going to happen. And if I'm wrong, I'm wrong, but I doubt it. It ain't going to regain 400 points. Ain't going to happen. 4808, 4402. And of course, everybody saw this candlestick right here, right? Everybody saw this candlestick all the way down to 4212. So why is that a big deal? Oh, that's a big deal. That's a huge deal. Let's talk about why that's a huge deal. And keep this video short for the general public, and then premium members, of course, stick around afterwards. I'll have an hourly chart and all the other futures products I'm going to do today for you. Why is it a big deal? So here's the bottom of this candlestick right here. Okay. It's a big deal because it got below the quad witching back in 2021. The low there was 42.60, and this low was 42.12. Guess what? Stock market broken. Bam. There's no two ways about it. Get ready. I've been saying it. Others, of course, say it every day. Crash, 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 crash. Oh my gosh, it's going to crash. Every day is a crash, crash, crash. Part 1, Part 2, Part 99, Part 10,498. Crash. Every day they talk about a crash video. Boring. Obviously not reliable for those people that talk about crashes every day. Oh my gosh, it's all going to burn down. Well, now maybe finally they're going to be right after being wrong for 3 months. Excuse me as I get a sip of coffee here. I've been saying we're going to probably see a 1,000-point crash. I don't care. Call it what you want. I don't care. Call it crash, call it burn, call it correction. I don't care. Bear market, not bear market. I don't care. Put a stupid label on it. Slap a label on it. Lick it and stick it for all I give a damn. Okay, what I care about is being accurate enough to make profitable trades. And my premium members obviously want that too, right? Right, so 1,000 points or more. Is it going to happen tomorrow? Oh, yeah, it's all going to happen tomorrow. No, okay, let's get real. It's going to happen, most likely throughout 2022, maybe even to 2023. But it's definitely going to happen. And I've been saying this for the last few weeks, that, or at least, yeah, last week or two at least, we'll have to see whether this is going to come in like flashes, like quick flash, which is what that was right there. That candlestick was a quick flash. Or is it going to be steady? I think we're going to get a combination of both. I think we're going to get massive candlesticks like that one right there. 200 range candlestick, 214. Massive. And it bounced back. Forget the bounce back. There ain't going to be no bounce back to this. It could bounce pretty hard up into here. I think it'll get rejected if it gets back up to there. Might get a little above it, whatever. I don't think it's going to survive. It's not going to take out the all-time high. Just don't see it happening. Those stranger things have happened. Let's take a look at this daily cycle right here. February 8th. And this one over here, February 6th. Okay? So, of course, I'm going to repeat myself, but I think anywhere from February 2nd out to about February 9th is danger, Will Robinson, danger. So even if this thing does one of these, I think it's going to come back down. Or it's just going to continue its way down from where we're at. It might get a little bounce up in here, but not really have any really meat on the bone, and we'll see what it does from there, okay? Obviously, it looks like there's these indicators are trying to show that there's going to be a bounce. We could drive about 16 different freighter ships through that MACD right there, excuse me, which is huge. So we'll see how much of the bounce we get. I don't really care how big the bounce is, bouncy, whatever. This is a trader's market to the short side. Just wait for the opportunity to short side, because this is going to be a short side year. There's going to be way more short side opportunities than long side. Guarantee it. Okay? So that's the daily cycle. Let's look at the monthly. Okay, let me just look at this daily cycle now that I have everybody's attention. Everybody's watching the video. Is the daily cycle still good? Let me eyeball this. Let me eyeball this. As we get further back, it gets a little sloppy. But from about right here, most of it is pretty good. Okay? Most of it's pretty good. So I'm going to stick with this for right now. These cycles still look like they're valid to me, okay? And we'll just pay attention to this massive decline, 400-point decline and more. It's happening right now. This is the new session just started right there. We're over 400-point decline. Okay? So let's see, 400. It's not 10%, 9%. I'm just going to throw it's somewhere around 9%. Just throwing out some numbers. If we were to come down to 480 points less than that, which puts us at about whatever that's going to be. Okay, we had a 400-point decline. Yeah, another 80 will put us at about what, 4330-ish, something like that. I'm just doing some quick math here. 70, yeah, about 4330. If we got to 4330, that'd be about 480 points. Okay, that would be 10%. So we're only 64 points away from 10%, from a 10% decline. Okay, rough math going on. So that tells me we're in the 9%. We've had a 9% price decline since all-time high. For those that are all caught up in whether it's a bear market, is it just a correction, is it just a pullback? Oh my gosh, your analysis really sucks because you used the wrong word. You know, give me a friggin' break. Okay, at this point, for those that want categories, this is a correction. It's not a pullback. Okay, so there you go. Now you have it official. It's a correction. Oh my gosh, not the word correction. Oh my gosh, you know what that rhymes with, right? So there's a correction going on. And if it gets what? 8, is it 8, 15%, 18? I think 20% is bear market for those that want to know what the next word would be. Oh, if we get to 20%, it's considered a bear market. Okay? I don't give a frickin' rat's fart. Okay, I don't. I see this kind of candlestick and I see opportunity. This may do that. It's going to come back down. There's probably Steve Miller from Ask Him probably has hit the nail on the head. But I see this being a big risk. This is a big risk out here late in February. Okay? Bing, bang, bong, guys. Get ready because 2022 is going to be a monster year to the downside. I think we're going to see more than 1,000-point decline. Been saying it. It is most likely going to happen. Let's look at the weekly chart. You know what I mean? Let's go back to sorry, I didn't go to the monthly chart. Let's look at the monthly chart. Let me change my drawing set to monthly. Do I need to update anything? No. We don't need to update anything on this. End of June. Middle of summer. Okay, it could be anywhere from May to August. Okay? Because on these huge time frames like this, things are massive time frames. We're talking years. 78 months. Okay? So 6 times 12 would be 72, right? So more than that's 6.5 year cycle is what this big purple arc is. All right, so we don't sweat it when I say things like May to August. Okay, I want to see somebody out there get it better on a 6.5 year cycle. I want you to narrow it down to the day. Yeah, give me a break. Good luck with that. So be prepared for the middles, anywhere from like late spring all the way out to like early autumn or fall. Okay, for this to hit the low. This is 2022 right here on this chart. Okay. We're going to get below this 50-month moving average. It's going to happen. Whether we get below the 50-month moving average in 2022 or not, I don't know. But right now, that 50-month moving average is 3,300. It probably will continue to rise a little bit. Then I think what's going to do, it's going to rise a little bit more here for a while, and then it's going to start flattening out, and then eventually it's going to roll over, and it's going to get slapped down like the little bad market that it is. Okay, I'm refraining from using bad words. Okay, so that's what I think is going to happen. She's gonna roll over. Okay, this is going to happen. If I were just to draw this out there, okay, 3,600. And something, when they got up here to 4,800, 35, 3,400 just kind of ringing bells in my head. That's where I think we're headed. 3,400, 3,500, somewhere in there. Okay? Which would be a 1,400 point decline approximately, maybe a little more. Okay? Yeah, it's going to happen. 1,200, 1,300, somewhere between 1,000 and 1,500 point decline. You bet your bottom it's coming. Okay? All right, so enough of that monthly chart. Let's look at the weekly. I'll switch over to the weekly drawing set. January 16th, so we can forget that. That's already come and gone. May 8th. Again, like I've been saying before, look at this. Look at this. For the first time since the pandemic, and for all you troll leftists, I was just going to say, I don't care. You can all unsubscribe, unmember. I don't care. For all you leftists out there who like to troll my channel, yeah, I'll say it. Pandemic. Does that hurt you? Pandemic. Does it give you like a pain in the side? I hope it does. I don't give a rat's butt if it does. So anyway, over here, the pandemic, okay, this is the first time since the old pandemic that we've actually got below the 50-week. Okay, so that's significant. That's what? Let's see. April to April is 1 year. So almost, not quite 2 years, like, whatever, a year and 3/4. Okay? So we've been above the old 50-week for a long time. Not anymore. Okay, so this is over here in late May. Okay, I think that's May 28th. What did it say? What did it say? May 8th. Okay, so May 8th over here, and then on I think the monthly chart was end of June. Okay, so like I said, anywhere from like late spring all the way through autumn is going to be the low point, most likely, in the stock market for 2022. Okay. And that could be, I don't know, 500 points. I tell you what, 500 points now, it's going to be more than that. It's 500 points, please. It's going to be more than 500 points, guys. It's already at 400. And then some. 500 is child's play. 1,000 is going to be child's play. You know, I could see 50% or more of the market being lost. 50% of the value of the market. Crash, bang, boom. Oh, yeah. Especially with what you got up there in D.C. going on, doing a bang-up job. That's right, I said it. That amazing job they're doing up there in Washington, D.C. Oh my gosh, the selected one. Wow, he's doing such a great job. Him and his group. Amazing. Let's see, we got supply shortages. We got, an attempt to make large corporations have their employees basically get a non-vaccine vaccine. Yeah, good thing the Supreme Court shot that down, huh? Anyway, I could go on and on and on about D.C. and how it's affecting. And you got the old Federal Reserve and BlackRock doing the happy dance on the rates. If you know what rate that is, called the lending rate. Okay? The Fed lending rate. That's got its part into this. Smash, bang, boom. More to come. So those are the cycles. If you don't know what the cycles are and you didn't get them, pause the video, go back, watch them again, write them down, stick them on a post-it note, stick it to your forehead. For the premium members, I'm going to switch over to the hourly chart. You already know what I'm going to say. For all the rest of you, $5.99 after Google takes its $2 out of my hide and leaves me with about, I don't know, $4. I get about $3.80. I just say it like it is on this channel. I don't care what people think. I get $3 and about 80 to 90 cents after Google takes money out of my hide. So think about it. I'm charging $5.99 and I get $3.80 out of it. Thank you, Google. Oh, I love Google. Man, when I get some time and opportunity to get off Google and YouTube's platform, see ya! All right, premium members, let's switch over. Let me go to the hourly set. What do we got going on here? Look at this, guys. Oh my gosh, was this hourly? I mean, my goodness, how good is that? Guys, this cycle right here, when it came down to this cycle low, the hourly cycle low right here, and never really got a strong rebound, like it didn't take off, with this new hourly cycle, we call that a very weak cycle. Okay. That's an extreme left-hand translation cycle on the hourly chart for the S&P 500, okay? Because it never really went anywhere. It didn't come up and bust through the 50-hour. It didn't get a strong impulse. You follow what I mean? And it just all the way down. When was this cycle ending? Yeah, 8 p.m. When I read you those cycles, what does this one say here now? Is this thing moving around on me? No, it's staying the same. Okay. Let me look at this one. What does it say here? Yeah, 8 p.m. on the 24th. I think I said 5 p.m. or 8 p.m. Okay. There was two different cycles I looked at. This one's at 11 a.m. I mean, how good is that? Within a few hours, right? You can visually see that this is where the cycle low was projected, and it came right down in there within like what? Less than a quarter of a day? This is like 8 p.m. tonight, and it hit its low at 11. Okay, you may still get some action down into this. Okay, but we're talking about 8 hours, 9 hours. That's it, 9 hours. You know, once you get past this midway point, that the risks are going to increase, that the price is going to decline. Right? You should know that. That's cycle analysis. As you get past the midway point of any cycle on any chart, daily, weekly, monthly, hourly, as you get past that midway point, there's a greater chance of decline, usually. Okay, there are exceptions. So anyway, right now we're getting this bounce, the old bouncy, but the Big Daddy's already showing there's potential weakness. Okay, on the hourly chart. Let's zoom in just a little bit here. Okay, that's 8 o'clock tonight. We'll see what this thing does. I don't think the stock market's got a snowball's hell in chance of hitting an all-time high anytime soon. If we're not going to say ever, but it ain't going to do it anytime soon, guys. And it could be years before we get up to that 4808 again. Years, like in more than 5, more than 10. It could be a very long time. I'm not saying it will be, I'm just saying it could be. Okay, I know trolls like to come on my channel and say, an if is not analysis. Of course it is. Analysis is probability. And for all you trolls who like to come on my channel and give me a hard time, go find a YouTube channel or any other analysis. Maybe you can get it on CNN. How about MSNBC? There you go, your favorite channel for all you leftists. Go check them out. Go see if they give you the cycles. I don't think they do. Well, what do you know? You're back on my channel, right? Giving me a hard time. Analysis is probability. Very few people are going to go out and say, I absolutely positively know that at 7 a.m. on July 4th of the year 2028, there's going to be a massive stock market crash, and you should short everything. Your pants, your car, your dog, your kids, everything. Just short it all. No, nobody does that because everybody works in probabilities. Okay? And that's what this is. The probability is the stock market's going to lose buku value in 2022. The probability is very high. Now on the hourly chart here, okay, for those that want to know the next hourly, January 26th, about 6 p.m. Okay, this may be reworked because that's what we do with cycle analysis. Yes, cycles move. You know, I got people that, you moved your cycles. Yes, that's right. The cycles move. They adapt. And any good trader knows that if you're going to be a good trader, you have to adapt. Okay? So as it stands right now, though, January 26th, about 6 p.m. Central Standard Time here in Texas is the next cycle low out there, okay? And this 8 o'clock tonight thing, which is only about 2 hours away from the time I'm doing this video, we could see a price decline coming in there. It's possible, okay? As it's bumping up against this 50 hour, I don't know. We'll see what happens. This may have been it already. Either way, there was no reason not to make money on the right side of this cycle. No reason not to make money. No, having the knowledge that this was a cycle low out here gives you a lot of confidence that you could trade short when you start seeing that kind of action. Okay? All right, especially when you got this stuff going on over here with this big old, okay? And then again. All right, a lot of weakness in the market. All right, enough of that nonsense. We're going to move on to crude oil, because this is the day I'm going to do all the futures products. Here we go. Okay, I don't think I have drawings. Oh, maybe I do. I got a drawing set here. February 8th. Crude oil has a low for February 8th. Bing, bing. Bing. Okay. Yeah, that's looking like something's going to happen in crude oil. Looking like crude oil is going to have a little pullback here. but it may not be a strong one. We went from energy independence to energy dependent. In less than a year, we went from being one of the richest energy independent nations, shipping out our oil all over the world, people buying our oil. Gas prices in America were super low. Less than a year later, I wonder why that is. I wonder what's going on there. California's got $4, $5, $6 a gallon in some places. Imagine that. Wonder what's going on. Can't be anything to do with DC and the clowns that are up there, huh? Nah, that ain't it. Nope, can't blame them. Oh no. Either way, little pullback, and then I think crude oil is going to take off again. So there could be a pullback here, but crude oil is liar, liar, pants on fire. Crude oil has been super strong. So we'll have to see. Does it do a big pullback all the way down here to $76, $77? We'll wait and see. Okay, right now it's looking kind of weak. Okay, so I would expect prices to continue to decline in crude oil through the first week of February. What do you know? Sounds familiar. Okay, I'm not even going to mess around with the monthly and weekly charts. We're going to bang on right on over to gold. All right, looks like I need to do cycles on gold. Let's do the cycles together, shall we? Let's pull some cycles. Do I have daily in here? I do. What do you know? I already have some cycles. Let's see if they're any good. Oh my gosh, look at these cycles. Are a thing of beauty. My goodness. January 27th. 2 days from now is supposed to be a cycle low for gold. Right here, January 27th. Okay. What I'm looking at right now doesn't look like gold is weak. It's not quite there, but it's up in the area where it could have a pullback. It is up in the area. We do have some divergent stuff going on there. Okay, possible. Yep, some divergence dots, but a little bit of a recent low, so they could be false flags, but So anyway, 127 is the low. We'll have to wait to see if it's much of a low. What's this other one? What is this other one? March 10th for gold. So January 27th and March 10th, those are the two daily cycle lows, okay? Yeah. Man, the cycles back here were just bang on. Oh my goodness, cycles are hot. So it could happen. We could get some type of pullback in gold going into the next couple. For the rest of this week, guys, we could see gold pull back. Maybe come back towards this, guys and gals, towards this 50-day moving average. Possible. Definitely possible. Let's move on to natural gas. Do I have any cycles in natural gas? I believe I do. Okay, daily cycle for natural gas. There it is. It's like natural gas had a nice little rebound there, got above the 50. Didn't get rejected because it definitely got above it, but it eventually gave it up. Look at this, guys. I mean, look at this. Look at this. Excuse me. Does it get any better? Seriously. Does the cycle analysis get any better? I've said that before. I should be charging 5 times the price for this membership. Look at this. Bang down right into this. Crazy. That is like spot on. So when's the next cycle low for natural gas? Daily, February 16th. What do you know? February, hot potato. Okay. February 16th for natural gas. For those who want to know, that's it right there. That's going to be your cycle low, 216. Okay. This one was absolutely monster on. This one. This one. This one. This one, this one, kind of that one, not much, kind of flat, okay? Natural gas's behavior is a little bit sporadic. It's not as reliable as other products, but you can see that the cycles, for the most part, have been pretty decent, okay? So remember that. That's your cycle for the next daily cycle, okay? Natural gas looks kind of weak, guys. Like, it doesn't look like it wants to rebound strong. Looking very flat here. Okay. And I think that's all we're going to get right there for the old wintertime bump. I think that's it. And that's it. It came and went. I'll be surprised if we. Well, you never know in February. February is the coldest month. The coldest month in the United States of America for most of the U.S. So we could see something else in here. But for right now, natural gas looks weak to me. All right, we're moving on to wheat. Let's look at wheat. What's going on with the old wheatsies? Wheatsy tweetsies. No, that's not too bad. It's not too bad. That's another daily cycle that looked pretty good. January 20th, and when was it? January 14th. Not too bad. A little bit not spot on. Looks like it kind of hit right here. So probably about 3 or 4 days, trading days early. But pretty doggone good there, guys. That's not too bad. Not too shabby. Okay, and then it actually did a little something right on the cycle low. Right now, wheat looks like it's got some strength behind it. Could get toppy, pull back down, and then maybe come back up again before it does this. I don't know if it'll get way up in here. But we're starting that new cycle. This could get going for a little bit. All right, it's a new cycle starting right here. Bop, bop. With some possibility of a short-term pullback or flattening out. But there's a little bit of strength there in wheat. We'll have to see what it does. Okay, so those who want to know the next daily cycle, February 22nd. That's what that is, 2/22. Okay, that's the next cycle low for wheat. All right, let's move on to oats. Got some premium members who trade oats from time to time. I know I have made a I don't remember what I made, $2,000, $1,800 off a contract off of oats. So made a nice little profit off of that. Let's see. I know I got one premium member that made thousands. Made some big money, which is really cool. Good to hear. Let's look at the daily. January 27th. Oh, what do you know? It sounds just like, if I'm not mistaken, that was it gold that had January 27th? I think it was gold that had January 27th also as a cycle low. You got to understand in cycle analysis, a lot of times certain products will have the almost identical cycle. And I think it was gold that had January 27th. So that's what that is right there. January 27th, just a couple days away for a cycle low for wheat. And then we'll pay attention to see if it takes off. Okay. There was a little bounce here. And it did happen. I think, I'm trying to remember. What is it? Is this way back? Okay, yeah. I think one of my premium members, I said to that premium member, if you're listening to this video and watching this video, I said you might want to cut that position short, or or at least take some of the position off the table and keep 1 or 2 contracts on, because I was pretty sure that was going to happen. But if you weathered the storm, that's fine too, depending on what month your contracts expire. Maybe it's about to make good again. But it could get a nice bounce going into this cycle. So if you're still holding oats positions, be aware of that. Okay. That new cycle starts the 27th, 28th. Could get strong, come back up here. Okay. And I'll even look at the monthly for oats because I know someone trading it. I don't know if I have a monthly chart. Yes, I do. Let's switch over to monthly. So way out in November, almost basically December of 2022 is this cycle low. At the almost at the end of the year. Last month of the year. Okay. Oats looks weak. Continues to look weak. Until it tells us otherwise. Still going down. Okay, let's look at the weekly chart. Let me get the weekly drawing set. Yeah, oh my goodness, look at this. Well, a little bit of a bounce here, so you got to be a little cautious. Little bounce. Long term, oats continues to look weak, and I think, as I've been saying it, I think oats will get below $500. I think it'll even get down to the 400s. That may take some time. It may not do it all in one shot, right? It may not do it like that, just whatever. Okay, we're in the weekly chart, so it'd be more like going out into 2023 is kind of like over here, I think. This 2023 way over here. So, you may get some other stuff going on, and then, whatever. Right, who knows exactly what it's going to do, but I think long term, oats is nowhere near its bottom. I think it'll get below 500. I think it'll even approach eventually. It may take a few 2 or 3 years to do it, but eventually I think it'll get down into here, somewhere around the 400 range, maybe even a little lower. But I think it's going to get down to 400 long term. Okay, let's go look at live cattle. Live cattle. Where's the daily chart? Daily this. Okay. Wow. Well, I mean, look at this big old... Oh, it had to be a new contract. Yeah, it was a new contract. That was a new contract, just like this one over here. So the big gap up here is the new contract. Okay, that's the January contract, I guess we're in. Yeah, April. Yeah, okay. Yeah, right. Trade. This is the April contracts we're looking at here, just so you know. Live cattle, April 2022 contracts. Yeah, I'm not going to dive too deep into analysis here. I'm just going to look at this cycle low. February 24th is a cycle low, daily cycle low. So that's, expect prices to stall or decline down into that date, okay? Right now looking pretty strong. Man, nice bounce. And then a pullback. Right now it's down to 140. But look at this, basically this channel, you know. You got this channel going on. And it may even be up in here now. So live cattle looks strong. I mean, short term though, could see a pullback, right? You could see one of these events. Just looking at this, possible. Eventually, yeah. Look at this candlestick already. Is almost like this. Well, as a matter of fact, this candlestick filled the gap. See, it was from here to here, and these two candlesticks filled that gap. So we're pretty much back where we started. Okay. So I wouldn't be surprised to see this come down, touch the 50, maybe bounce, or even go below it as we approach that cycle low of 224, okay? 224, cycle low. Okay, so I wouldn't be surprised to see prices decline into that date. Okay, all right, let's go look at feeder cattle. Finish up this video with the feeder cattle. And let me get on to the daily. Look at that, wow. Feeder cattle, monster crush. 161. Well, bam. Got all the way down to 158.22. Okay. Feeder cattle looks kind of weak. And what is the date here? What is that cycle? Same one, January 27th. So feeder cattle looks weaker than live cattle. So that's January 27th. We could see more price decline coming in the next few days. Or this could have already been the cycle low. But based on what I'm seeing here, I don't think so. There's more price decline to come in the feeder cattle. For those who want to know that, the next daily cycle low, March 7th. Okay. And if I'm not mistaken, that's all of the futures products. I just went with the daily for now. If I get a chance, I'll look at the monthly and longer term stuff later on. But there you go, guys and gals. Hope you enjoyed it. Talk to you all real soon again next time.